Yo. Oh, let me check the quality of this. Oh, that's good. Yeah. Should be good. Alright. I must start doing this day one of doing video trade recaps. I'm gonna be doing this every day. If you find this I'm doing this for a friend, but if you find this channel, then you're welcome for the sauce, because people sell the strategy and course for like fucking $500. So, I woke up late, so coming into the market, I woke up like around right here. This is when I got on the charts, so 11 something, New York time. Session indicators, so this was no session yet, and then I like started waking up, like my brain around here, and then I saw that lunch just started, and let me go through my thought process. I looked at different time frames, I looked at different standard deviations, and this is like all chopped. I couldn't see anything, but higher time frame, New York open right here, right? And you see this dump. So you know AMD, right? I'm talking to the person I'm recording this for. So accumulation right here, and then the leg up. This is the manipulation, and then you can identify this after this dumps, because after this dumps and this breaks the low that was made during all this like accumulation right here. This is all the accumulation. So actually accumulation's right here, because this is all like, no, it's not going anywhere. And then this leg up right here, this is the manipulation, and then distribution, the D, right? So I saw this, well, I saw this dump, and then I saw this accumulation, so I knew this was the manipulation. And for standard deviation, the most success you have for reversals is if you mark it on the manipulation leg. So as you see, this is the manipulation, the highest high that was made before the dump. And the reason I marked it on this low instead of this low, low-key, this would have worked too, but the reason why, this is why I don't really like trading market open or like really high volume sessions, is because like you might get slippage, or like you might get a random spike that isn't too shit. Wait, my bad. I had to do something. Alright. Where is I? Manipulation leg? Okay, so since I don't trade high volume times, unless it's like really clear, like for example, I see something that's really nice. When this opened, it went up, you see the wick, and it tapped into this CIST right here. And this would have been a really nice entry, but only if, I would only take this if in pre-market there was a standard deviation and this was a reversal point. So this, if this wick tapped into something, that would signal me that there was going to be a reversal going down, and then I would be looking for PRAs for a short, and this would be a really good one. However, I didn't look at it, but okay, I haven't done last London leg in a long time with this work. Not really. Lower time frame. Was this news 8:30? 6:30. Good talk. With like I would do this like pre-market before market open, because when I did trade market open, I would wake up at I guess in New York time, I would wake up at 9:20. So I have like 10 minutes of market analysis, and that's enough for me. But this day, I don't think I would have seen anything pre-market. Oh, okay. Hmm. I probably would have seen this. Because I'm kind of confused looking at this right now, because I wasn't here when this happened. But if I woke up like around here and I saw this, because this would have been the last like pump up, right? So I would look before that. And then this right here is all like manipulation, same range. And then once it broke this range high right here, and it went up. So this is its low own leg right here. I would mark the last leg going down, because since we went up, I would mark the last leg going down, and I go on the 1 minute because it looks pretty clear on the 5 minute as well. Because this manipulation right here, same range, and then this, because like you can see this is obviously like 4 candle pattern. It's like obviously going in one direction, right? So this isn't accumulation anymore, obviously. So once you see manipulation, you mark the last candle of that, and then that ticked -2, and then this would signal a downward momentum, and then you can you're basically looking like from left to right. So the way I do my analysis, first of all, when I wake up, this is today, okay, so yesterday it was like this, and I guess this comes with market experience. I don't really know how to explain it, but these types of candles, like you see how like yesterday we reached here, but then we closed all the way down here, so that showed a big rejection. So it showed that we weren't really, there isn't really any bullish momentum anymore, right? So my bias for today overall would be previous day low right here. If I was bullish, then my target would be previous day high, but since it's not, it will be previous day low. So that's for one. That's my draw for today. And then go down to 4 hour. Right, hold on, let me make this more clear. And then let's go down to 4 hour. That was previous day low right here. And then again, these are more patterns that you have to memorize, but this right here, these 2 candles, this is a CISD right here. And usually when you see this is a pretty good confirmation that you're gonna go in this direction. Like this is a bullish CISD. CISD is basically a 2 candle pattern when the next candle completely engulfs the previous candle like this. So this whole candle got like, I don't know how to explain it, but if this closes, then this, you draw a box on this and this becomes a CISD, and look how perfectly this rejected. This 4 hour. So if you scale down, there's probably like some more perfect PDRs that are aligned right here. That's why I didn't reject on the CE, but either way, you're just stacking confluences. And this is like a pretty high time frame, so if you keep scaling down, you'll find more and more confluences, and you'll narrow down like which area in this 4 hour CISD would be high probability. Like right now, right here. This is CISD right here. This candle, and then this engulfed it going into another direction, and we rejected off of it currently. And it doesn't always have to tap back into the CISD. It just, like, if you want an entry, then the CISD would be your entry. But just seeing a CISD itself like this, like we never tap back into it, right? But just seeing it get formed, this would be a signal for bearish, and just seeing this would be a sign for bullish. So first of all, yeah, my daily analysis, this is draw, and then what time is market open? Market open like goes around here. So we're pretty 70 points away from my daily draw. So I would be looking for shorts. At 2 hour, I don't really look at. Let me mark out daily open. I mean market open, so it's more clear. 9:30. Okay. I drew a lot of unnecessary stuff, so let me delete these. I just drew them when I traded. Alright. Going back to 1 hour, this is when market opened, right? So as you see, this is top-down analysis, the thing I told you about. So as we scale down, when I wake up and check the chart, it's around right here. It's during this candle, right before market open. So as we can see, like based on my previous analysis, we already see that we're like around this range, this price range, and my draw is right here, so we're pretty close to it. And now going to the 1 hour, we see that look, there's a fair value gap right here on the 1 hour, and we reject off of it. So that's even more confirmation that we're gonna go downwards. And I don't know if you know this PD array, but you know, see how it rejected, right? This white candle right here. This is called a rejection block. After price rejects off of a PD array and the candle closes and forms a wick, now you would mark this wick and this would become a PD array called a rejection block. And the CE of rejection blocks are often really like high RR good entries. So if I woke up earlier and saw this, I would have taken this. Let's see the RR. 10-point stop. You put the stop at the candle top or bottom if you're other direction, and then entry at the CE. And then like look at this shit, bro. If you target the -2 of this standard deviation that I'll show you later, that's bro. You caught the whole. You basically caught the whole New York. Basically, you caught all that. So this is a very strong PD array. Usually it works really well on the 4 hour, 1 hour, and 15 minute. That's where you'll see a lot of rejection blocks work really well. Let's see if I can find another example of it. Right here. So this wick, I'm assuming it rejected off of something. I'm pretty sure it was the -2 or something of the standard deviation that I marked. But any candle on the 4 hour, 1 hour, or 15 minute, or even 5 minute that rejects off of a major PD array and forms a wick, you can mark that as a rejection block. And like you can, I don't want to mark it because it'll show all my drawings, but if you mark this candle right here, the CE is like around right here. So you could have like, this is another A+ setup. Entry right here at the CE, stops at the low, and target whatever you want. Like, bro, that's a really good like RR. Anyways, all of this analysis is just like identifying the trend, and then yeah. So based on what we saw, daily time frame, the draw was previous day low right here. Wait, did we already take previous day low before market open? Shit, we did. Okay, that's not too good. So I would delete this. But again, we're going left to right. So if we go more right, we see price rejecting off of this, the 1 hour, right? So that's a pretty good sign. And then I don't know if you know about OTEs, optimal trade entries. So this is the current range we're in. And then OTEs are these. Oh shit, yeah. These are like the continuation shits. So current 1 hour like range that we're in. And then if we want to go lower, we will ideally reject off of 0.75 to 0.79. So this is like a range. You want the price to come back up here and reject. And as we see before, we came up to -705 right here, lower rejection. And then before market open, we tapped into -0.79, and then we rejected as well. So low key, this rejection block entry right here, this is like A+++++. If you saw this, because this rejected off of my -2 that I'll show you later. It's probably a lower time frame. It rejected off of, for one, -2, two, 1 hour fair value gap, or 1 hour BPR right here, basically. Yeah, a BPR, I don't know if you know, is basically overlaying fair value gap and inverse fair value gap. So you see this inverse gap right here, and then this current one, you're marking the middle of it. Like, you're marking the area where both of them overlap. So this right here would be considered a BPR. And considering we're on the 1 hour, this holds a lot more significance. So for one, reject off -2, and then two, reject off the BPR and fair value gap, and three, reject it off perfectly 0.79, which is the perfect spot you want to see reversals in this whole 1 hour range. So once you see this, you'll scale down, or you'll mark the rejection block of this candle that rejected. You can scale down, and then you can draw another. Is this a tick? Oh no. Well, this is why you need like I mean, market's not perfect. You're gonna have like little inconsistencies. So you have to use like other entry triggers. But so entry off of the 1 hour rejection block would already give you just 10-point stop. So I don't think you should be any more stingy about that unless it's like a 20-point stop. Then I would scale down and maybe look for like, oh, what if I use a 5-minute? What if I use a 15-minute? But in this instance, the 1 hour is already giving you a pretty small stop. So I would use the 1 hour CE. So that would be a really nice entry. 2 points of drawdown. And then literally just, if you target like London low, 120 points right there. Easy. Right. And then that's all just pre-market analysis. I woke up like over here. But anyways, I didn't do all that in depth. When I woke up, all I did was I see this AMD, accumulation, manipulation, distribution, and I marked the last leg before the manipulation, and I identified, okay, so this really is a valid, to me, I only consider prices that reject off of significant standard deviation levels like -2 or -4 to be considered valid, like complete reversals. So I see this, I'm like, okay, downwards, and then fair value gap right here, and then also we had the CISD, right? Yeah, we had the CISD right here. So there's obviously downward momentum. And then now that second phase accumulation, if you mark the last leg of accumulation, you will find the reversal for the manipulation. So this is where manipulation would cap out. So the anchoring for last accumulation leg is to find the reversal point for the manipulation. And then if you anchor the manipulation leg right here, this is where you'll find the reversal point for the distribution. So the whole AMD, you're predicting the whole move. The accumulation, you mark this to find the top, or like the reversal point for the manipulation. And then if you mark the manipulation, you'll find the reversal point for the distribution. And since, however, high volume, it wasn't too accurate, I didn't trade this for a good reason, but I used this to determine my bias. So once I woke up here, basically all I drew was this, because I identified the AMD. So I drew this, I saw that, okay, New York pretty much capped out at the low, and we hit these like -2.5 and -2 are pretty significant. And we see this like resistance, all these wicks at -2 to 2.5. So I took this as, okay, now my short-term bias would be bullish to go up because we already exhausted all this bearish momentum that we had during market open. So now I would want to see us go up. And then now, again, we're going left to right, right? So we're going to keep looking. We see 10 a.m. right here, this green, 10 a.m. And then remember what I said, rejection block. Boom, 5 minute. This last rejection block. It rejected off of negative or like all the standard deviation. And most importantly, it's like the lowest low. So we see this we see this reversal, right here, reversal. So if we see a reversal, we can pretty much like say that this last swing low, if it has a big wick, then it would be a valid rejection block because in order to what's it called? In order to form such a big reversal after such a big dump, this must have rejected off of something significant. I can look at it, but I didn't really do that when I traded. And again, rejection blocks don't always have to hit the CE. Anywhere inside the rejection block already holds value, especially if it's higher time frame. So we hit this 4-hour rejection block, not CE. We swept all this liquidity. Is it any OTEs? That doesn't look like it. I'm sure there's something, but you don't always have to see every single little thing in the market to predict it. Higher time frame, like the highest high we have currently, 15-minute leg from the very most high, negative 2.5 right here. So that's why this rejection block was formed, and that's why we had this swing up right here. Yeah, that's like everything in the market moves for a reason, you know. You just might not always see it, or it might not be your strategy, but there is something, there is reason. It's not random. So this shows that that is a rejection block. And since it's a rejection block, you draw it out. I didn't do all of that because I already I guessed, but I trusted my instincts and I knew this was a rejection block. I knew it rejected off of something. I just didn't know what it rejected off of until right now when I did it. Hold on. Alright, so I saw this rejection block and I saw we tap back into it. So that gives me more confirmation that we're bullish, at least short term, right? Because we made this rejection block, rejected off of something, so that's bullish. We came back down, we tapped into the CE of this, and we went back up. So that's even more bullish confirmation because we're respecting bullish PD arrays. What did I mark out here? Oh, fair value gap, or BPR, remember? We have this inverse and this fair value gap overlapping. So the part in the middle of both of these, well, is basically just this. Yeah. So that's another confirmation. We rejected off of this and then we reversed back up. So overall, all of this is just helping me determine bias. And so I was over here, and like I said at the very start, I saw that we just entered lunch session. And then you're just following price from left to right, you know? So we can see that we're kind of trending down and then rejected up. I'll put a line where I started looking into the market. It's around here where I woke up. So then I did all my analysis, other stuff that I just showed you. And I looked into the market right here. This is where I started doing lower time frame analysis. And then I see that we made this CISD right here. Remember CISD? This candle engulfs this whole previous candle. And so this is the CISD. And like I said, it doesn't always have to reject, or price doesn't always have to tap back into the CISD. Just the CISD itself shows like the current direction. So then you see how this tops out, and then this confirmation that we're going lower. So I take this as like a little retracement, or a, what's it called, reversal. So I mark it out, the last leg, from the high to the low, and I see a negative wait, no, my bad. I did the standard deviation to find my take profit, which is why I TP'd at -2. However, I entered, oh bro, a lot of this is like literally just market experience. Like I said, CISD is, I mark it like this, just like the previous bot candle, right? But sometimes prices reject, like you mark the wicks as well. So I saw this and I was looking to risk really little anyways, half size. So I saw we rejected like these two wicks, you see it? Like I put into account, okay, what if this is one of the times where the CISD is being valued as the whole thing, including the wicks, and not just the candle? Because I saw we didn't tap back into the candle CISD, but we did show some form of resistance after this first wick rejected, after tapping into this whole range. So I saw it again, and then I used Trade to trade, so I can go down to like 15-second time frame or whatever. So I think I entered on like a pullback and into like some fair value gap or something like that, any fair value gap. And since if this is the rejection point, then we shouldn't go back to it. So my stop would be at that, and I got pretty lucky. Or I think my stop was like at some other like PD array in the lower time frame, like 15-second time frame, like maybe some like swing high or something, but I didn't get stopped. So I saw rejection off of this and I entered short, stop here, and then this is when I, like, once we were down here, this gave me confirmation that okay, we are heading down and this isn't just like a pullback to go back up. So I marked the standard deviation and I saw the -2 right here aligning with this low. And if I went up to a higher time frame, and if you go to like 15-minute time frame, -5-minute, yeah, so right here, this is the candle that I traded. So previously there was a 5-minute low right here, this kind of low, this wick low that I marked out. So there was that aligning with the -2 of my standard deviation. So I TP'd at the -2, or yeah, that's where I put my TP. So 634.75, and guess where price went? 634.75, literally to the tick. So I TP'd to the tick, and that's basically the whole trade. I'm gonna go into this, but basically just to recap the trade: you wake up, top down analysis, highest time frame, daily. You find your daily bias, which is useful, but for days like this, it already got taken out in pre-market, so okay, you don't really look at that anymore. 4 hour, we see that we are going down. If you do trend lines or whatever, we broke out of this trend, right here, we broke out of this upward trend. So then we look for downward or like bearish PD arrays to confirm our direction. And 4 hour, we see this CISD get formed to the downside. So okay, that's another extra confirmation for bearish. And also 4 hour, look at this, this BPR. We have this inverse right here and this fair value gap. So if we mark the middle, and when I mean middle, I mean the part where both fair value gaps, the opening and close, don't like see, this is the inverse, right? But then if you drag it over, this fair value gap, it goes under it. It's not actually the fair value gap part. So we want the only part of both fair value gaps. So right there is the part of both fair value gaps, and that's the BPR. So we see 4 hour, we created CISD to the downside, we broke trend line right here to the upside, so we don't have any more bullish momentum. And this candle right here, 4 hour, and this one as well, we tapped into the BPR and we rejected down and we created wicks, and the body's closed under. Going down to the 1 hour, we again, the BPR that I showed right here, rejection, and then another sign, this this rejection block held really well, CE perfectly respected, and we dumped down. So now 15 minute, I see this AMD, accumulation, manipulation, distribution. I marked this to see if we bottomed out already, because all of this, what if this is just a pullback and we're gonna go lower? But no, I marked it and I see that we tapped into this, right? So this is significant. And then I identified this as a rejection block, and then I see it get respected. So that shows me short-term bullish momentum, and that tells me that, okay, this dump is probably over, and now we're gonna like consolidate and maybe move higher. But I don't expect to go any lower than this, right? Because we're showing a lot of bullish, we're respecting a lot of bullish PD arrays now. So then going into this, I went to the 1 minute. This is where the bullish rejection block did that. And then the good thing about trading lower volume and this time is that even when it's chopping like this, you can still get really good trades. Because trading is just being able to predict market going from here to here, go from here to here. If you can even accurately 100% predict market going 5 points like this every day, or like even literally just this, you can just size heavier and you can scale up and you can make hella bread just from this. So a little move like this, even though my short-term bias was bullish, correct? We just rejected off of the rejection block right here and we shot up. However, I saw this, and then this is just like market, I don't know, this comes with experience. You'll learn more. But we went up, pulled back, and went up. However, we didn't break through this, because if this was gonna be a continuation higher, it should have done this. But we never broke this high, and we stopped here. And then we created a CISD to the downside, this CISD right here. So this tells me either reversal or pullback. But either way, this is good confirmation for a shorts. And all I was looking for was a little trade today. So since I'm confident that in this short term we are gonna go down, I marked this. At first I marked this, just the body CISD, but we didn't tap into it. So I took into account, okay, maybe it's one of those where we do the whole body and wick of the CISD, and I see reject, and then we close below. So that's a good confirmation of direction, that my direction is correct. So I entered, stop at the rejection high, and then I did the standard deviation, saw the -2, scaled up, saw that low, and put TP right here. That's basically the whole trade for today. All of that, like I woke up right here. All of this analysis that I just explained for this trade took maybe like 3 minutes total. And all of this is hindsight, but this is just showing how mechanical standard deviation is. Because you see how -2 got tapped as well as the low. I TP'd right here. Perfect TP right here. And reject. And then since rejected, this is now another swing, right? So we can mark from the low to the high of this last leg. And you could have longed this because of the -2. 10-point stop, even 5-point stop, because this is a pretty low volume. You can put the stop at the previous low right here. 2-point stop even. And then you target the -2 again, which perfectly got ticked. And then once you see this, look, there's another CISD getting formed. Once you see this, you can go down to like 15-second or whatever. I can't do that on trading view because I didn't pay for it. But on my other trading platform, like even TopStep, you can do that. So once you see this rejection, you can probably like, bro, just enter on another random fair value gap, 15-second fair value gap. Those work if your directional bias is correct, and standard deviation and seeing rejections off of it give you really high probability directional bias assumptions. So seeing that rejected off of like standard deviation, think of it as a range, not specifically a key level. This is a range, and you can reject anywhere in this range. Think of just this as like a fair value gap, basically. -4 or like -315 to -4. This is another range. This is a range, a fair value gap. So rejected off of this, you could have entered on a lower time frame thing, and that's another short right here. And then you can anchor your standard deviation, bro, basically like however you want. Target -2. -5, you can't really see anything. I mean, 5 minute, you can't see anything because volume is too low. So stick with 1 minute. You can mark it like this, however you want. Just target it. And then you don't even have to use this because previously we have this standard deviation, correct? And the -2 did give a valid reaction. Any standard deviation that gives a reaction off of the -2, that means this whole standard deviation is valid. So that means all the other significant values, which are -2.5, -3.5, and -4, and -4.5. These are all very high probability reversal points. And as we see -2.5 right here, another tick, bottom tick. So depending on market conditions and like if you looked at the 15-second and like watched price action, whatever you determined or deemed like good, you could have targeted. I probably would have targeted this because this was low-key a equal low. There's two lows right here, and I'm not really greedy. This is a safe TP and it's already 40 points. I'm satisfied with that. So that could have been my trade, or the -2.5 would have been perfect. And after you see the rejection off the -2.5, this is another sign that we're gonna go up, right? So -2.5 got hit right here. 5 minute, we have a rejection block once again because we tapped into PD array, which is standard deviation. We rejected and we closed above all of this. So this shows that they rejected significantly, meaning this PD array held pretty good significance. Is there anything on 15 minute? 15 minute. 15 minute, we have this CISD right here. We have the CISD right here as well. So this candle rejected off the -2.5, the CISD, And that's literally basically all you need. You don't need any more confirmation than that. So we have this, maybe 1 minute. Is there anything in here? Not really. But however, after rejected, we swung up and then we went back down. So maybe this would have been an OTE entry. Negative 6.2. So we went up. When we're around here, you can draw this fib. And then anywhere between negative 0.62 and 0.79, these are all really high probability continuation entries. So boom, 0.62 entry right there. And you can target the low, stop at the low. 8-point stop loss, that's really low, pretty high win rate. You can either target back at the high. Oh shit, why is it all the way up here? This isn't really valid because we already came back down and we went below the origin of where we entered, where we anchored it. However, my logic may be flawed because this rejected perfectly off -4. Either way, realistically, good target would be up here because that's the most recent swing high and it's a equal high. 2 highs right here. That's another 40 points. Boom. And then now this is our low. Let's see if there's any standard deviation we could have done here. Not really. Not really. If we look at the 5 minute, this does count. We see -2 here. This rejected. You could have maybe tried an entry but got stopped out on lower time frame. Still, that's 2-point loss, whatever. And then the next significant standard deviation, -2.5, rejected. Candle closed below this, like on it. So now this is a rejection block. Scale down. And right on the CE, we have a CIST right here as well. Boom. CIST. Short entry at the CIST entry, or like where it starts. Stop at the high, 3-point stop. And you have to wait for a little. If you want to use standard deviation to target to set a take profit, then you have to wait until we go a little bit lower to form a leg or form something where you can anchor off of. So until then, look, there's another CISD. So this shows bearish momentum, which is in your direction, which is more confirmation that your trade is going to work out. And there's not really any standard deviation anchoring here, so you could have just targeted the low again, or once again the very first standard deviation that we did. -2 got respected, right? We went all the way back up here. -2.5 got respected, went all the way up here. So -3.5 or -4 are, mechanically speaking, should be your take profit. And mechanically speaking, this trade should hit TP. This would be a successful trade. But I'm not going to stay on here until that hits. But either way, once this hits, depending on how it reacts and whatever, you can long this shit again. You can do like a 10-point stop. Yeah. And target whatever shows, whatever PDRA gets formed, or I don't know, man. If this forms a CISD, like if this candle ends up closing below this white one, then this right here is another CISD right here. And then you can target that right there. Cool. I'm just showing that trading is very mechanical. You just have to figure out how the mechanics work. And yeah, this video is way longer than I expected. My next few trading recaps are not going to be like this. This isn't really a recap. This is like an introduction to my strategy. So in the future, when I can like use more terms and stuff without explaining. So basically, that's my strategy. People teach this shit for like, this shit's in like $200 to $500 courses. So yeah, that's all for today. Caught a dub, if you didn't notice yet. Shorts from here to here. Could have basically predicted all of this 1 hour price action right here from standard deviation. But yeah, that's it for today. Bye bye.